Okay, I understand we are live. All right, cool. So then let's kick it off. Punctual 3 p.m. CET and 4 p.m. Southeast Europe time. Hello, everybody. Thanks for joining this pitch with our Estonian company Income. My name is Ronald. I'm the regional head for the DACH activities at SeedBlink, based in Vienna, Austria, and taking care of Germany, Austria, Switzerland. Having the pleasure for the second time, a startup which we're quite excited about called Income from Estonia. They came back after doing a round in the past, and have with me the founders Lavrenti and Kimo, and they will give us a short pitch of what Income is doing, why they think it's a great company, where this whole thing is headed. And we will then follow up with a couple of questions, and we will open the questions also to the audience. You can use the Q&A button on the bottom of the page to ask your questions. Feel free to shoot them out whenever you want, but we will not interrupt the pitch of the two founders. So without further ado, Lavrenti, Kimo, short introduction by yourself or of yourselves, and then we go straight into the deal.
No, okay, thank you. Well, I'll go first. So, hey everyone, Kimmo Ritkonen is my name. Some of you may know me from the previous round. I was then doing the pitches alone, and now I'm joined by Lavrenti, who is the current CEO of Income.
Thank you, Kima. Yes, my name is Lavrenti Chudakov. I joined Income slightly later, started from a product owner position, and yeah, as you may see now, CEO, and I believe we supplement each other pretty well. Let's see how it goes with this pitch. So, Kim, I guess you will
Yes,
be
so
starting.
we'll start. So we'll do the pitch in a way. I'll talk a little bit about the past. What is Income? What are the solutions? And Lavrenti will then follow up with the product and a bit of the future. Now, most of you hadn't probably seen this pitch. We'll try to keep it short and then allow time to answer questions as well. So please, let's go to the first. So, what is Income? Income is a fintech platform. It's an investment platform that connects essentially fintech lenders to institutional and retail investors. So, if you want to think about it as a marketplace where we connect investors to assets, then that would be probably the most accurate way of thinking about it. We do not do lending ourselves. We just cooperate with partners and investors. A lot of our investors are retail, so meaning you can start from 10 euros to invest. But we also already have managed to get some institutional investors with 1 million plus balances as well. So, and that's a direction we want to also move forward to gain more traction with the institutions. Key numbers, a few here: 54% revenue growth year on year, about 9,000 approved investors, and 77% AUM growth year on year. So essentially meaning the amount of loans that have been invested outstanding on Income. And total loans funded around 140. I think today that was by 2024 end. Today, I think we're around 170 million. So quite a good traction lately. Let's go to the next one. This is just a few of our achievements, but for those who are interested, refer to the pitch. There's not much here to comment, self-explanatory. Traction. So as you can see, we started developing around 2020, post-COVID time, launched in January 2021. And the first year was, as you can see, quite low in terms of growth. We were still perfecting things. And then we started growing quite nicely. 23 was a difficult year for fintechs generally, also for lenders. And they were struggling to figure out where to get funding, what's the deal on the table, and so forth. So we saw a little slump there, which bottomed out in January 24. And since then, we've been growing quite nicely. Today, I think the outstanding is 23 million. So the 19.7 here is a bit outdated. But yeah, good traction so far, and especially in the last year. But where did Income start? It started post-COVID 2020. I was investing on a lot of platforms myself, similar loan marketplaces, perhaps some mentioned here. also, and a lot of the loan originators got into problems during COVID, and there was a lot of delays. And then going through the agreements and the documentation and the structures myself, coming myself from finance, I thought that there's a better way to do this, and we need to step up the game as an industry also for the investor protection. That was the problem. The next slide tells how we solved it, or at least we think we solved it. If you want to move forward, Lavrenti. So my background in finance as a lender, a fintech lender, a CEO of a fintech lender, it was very clear when we closed funding from institutions that there's a certain way they look at the loan portfolios in terms of due diligence, what they do to these fintech lenders. And there's a certain structure they use in terms of every loan carrying an equity stake from the loan originator. And it's not that technical. If you want to think of a mortgage, then the bank will require some payment down from you. Is it 20%, 30%? And then the rest they will borrow. But if you default on that loan, then they will foreclose the whole 100% of your house value to get their 60% back or 70% back. So I think that's a good analogy to understand the junior share. Like a house, every loan carries a junior share, a piece of equity that is the first loss buffer from the loan originator. Now, cash flow buffer is very tightly tied to junior share. The concept of there is how we look at it. What is the amount of cash that the loan book actually generates? So again, if you take a mortgage or a house analogy into this, you could say you foreclose on a house, it has a value of how much can you sell it for. A loan portfolio has a value of how much can you collect from it. And then if we say that, okay, there's a 1 million euro loan portfolio where we think we could collect 1.2 million, then we might say that, okay, against this cash flow buffer, we're willing to only allow investments up to 700,000 in. So now you have a 1.2 million euro collection pool to cover for 700. Obviously, that's the logic in it. These are simplified examples, but maybe those help us to understand a bit more what we're trying to do differently than other platforms where usually you must just have a skin in the game, which is not really a protection, it's just an alignment. Now, the last point, what we did a bit differently, I think, is technology. So on the background, the API connects to the loan originator's loan system or the loan management system. And essentially, we mirror the actual state of the real world assets as they are shown on income. So we noticed that there was a mismatch on other platforms back when we started, that the loan might have been repaid, but it was still open on their platforms. And then we thought that this is not the right way. You have real world assets, how to match them with what we show to our investors. And the logic was an API connection where we mirror the state of the loan book to be what it actually is. So hope that sheds a little bit of light on what we do differently. I think the next slide is product. And that is a perfect place for Lavrenti to jump in and explain a little bit of what we do and about the future of it.
Yes,
Thank you.
thank you, Kimo. As I mentioned, the product is ready, is here. And when I joined the income, my first main goal as a product owner was to roll out the mobile app. At this point in time, it wasn't present. We have an approach that, from one perspective, investors should be able to use all the filters, all the smallest tweaks to be really able to manage their portfolio. But from another angle, it should be easy enough for regular people to use. As I said, currently it's ready. We still see that a couple of larger features should be developed, and I will be mentioning them a bit later on. That's one of the reasons why we have this round. Our intention is to get from 1 to 3% of the market share by 2031. We see this is realistic. We see that the market is growing, and this is more or less aligned with other platforms on the market. So we're not hoping for a miracle here, trying to move on pretty realistically. In the current round, of course, and I see that from the Telegram that we receive quite a lot of questions, guys, what you are going to do with the raised funds. I will focus on that. First of all, of course, as a platform, we need to grow, and grow means that from one perspective, we need new loan originators. And to cover this supply from the loan originators, of course, we need new investors. That's will be the one of the biggest spendings, of course. For sure, when the company is growing, then you need more talent on board. This 25% is dedicated for that. And talking about the new markets, we would like to expand to Mexico and Philippines. For us, it means legal work, and each new market is a little bit on more heavy side. From that perspective, we need to understand and we need to protect investors. Plus, long time awaited secondary market, as you see here, it was promised, and we really hope that this round is successful, and we will be developing that this year. Talking about the platform and how we earn. As you may see that currently we have 11 of active loan originators, and by the end of this year, our plan is to have 17. And more or less, roughly, we are like estimating that we will be having each year 6 of new loan originators. But we keep in focus that they should be big enough to cover the demand from the investors. By the end of the year, we project that our portfolio will be 36 millions of assets under management, and we, as a platform, are earning percentage from this amount. As you may see, it's like from 2 to 3%. Really, really depends on the loan originator and what arrangements we have with them, but it displays picture nicely. And already mentioned markets where we would like to expand. The main thing here would be that we still try to keep the balance, that the European and other regions should be more or less equal. But it doesn't mean that we are not looking around and not checking the new markets. Then business development. A lot of text here, of course, I will not be reading that. The main points are that at the moment we are spending around 77 euros per each investor to onboard to the platform. And within 48 months, we earn back slightly less than 500, which is already good metrics. We have a lot of plans and a lot of action points which should, from one perspective, make it possible for us to decrease the amount of money we spend to get a new investor on the platform. And from another direction, we see strong evidence that the average portfolio of the investor is growing, which means for us automatically that we earn more from the investor. Plus, as Kima mentioned, we started in 2021. And we see that we have a really good cohort of those early investors, which is still alive. We can predict how long they will be with us, but we see that it can be really long-lasting relationships. By the end of this year, we would like to double the amount of active investors, and in 2026, it's slightly less than doubling as well projected. Financials, a lot of numbers. I would like to focus here purely on net profit. As you see that we earn more and more each year, revenue is growing. We still try to keep the team small and still try to execute only the necessary stuff, but from another angle, we have to grow. And our break-even will be achieved when the assets under management are around 35 millions. Meaning that by the end of this year or beginning of the next year, we are already in this break-even zone, meaning that our net profit turns positive if everything goes well and as planned. This slide supplements the previous one, which was showing the current state. Here is our growth, how we would like to earn, and how assets under management should be growing. I believe I will not stop here. If you have any questions, we'll be happy to cover. Yes, for the revenue, We have used a pretty simple model, which is based on the revenue generated by the system users. Currently, you as a potential or let's call already existing investors investing at the valuation of 5.5. And of course, with our growth valuation, we will be growing, which is also slightly projected here. And our multiplier is still pretty conservative for the fintech, which is 5x. Here you can see the comparison with the peers, other platforms. The main goal is to demonstrate that we grow more or less in line with other platforms, and our assets under management year over year are demonstrating really good tempo. We just need to proceed or move faster. Platform, team, everyone are pretty well received by the public. As you may see, we are part of different charts. More or less, we feel that, okay, from one perspective, we need to develop more. We need a little bit to improve the system, but overall, people tend to like what we're doing. Break even, that's the main goal, as always. As I mentioned, from one perspective, we have set of actions how to spend less for getting new customers. From another side, we are looking at new markets, new features in the system, and ultimate goal for this year will be to end in break even. Team, pretty small, 9 people, but still guys are doing really great job, really know how to handle their part of the responsibilities. I find that now it's really nicely staffed and um, zero doubts that they're capable of. But of course, while growing, need slightly more to keep everything in control. And the next slide will be actually thank you. I invite everyone to join and of course ask questions.
Brilliant. Thanks you, Lavrenti, and thanks, Kimo. Investors may use the Q&A function, as I said, the button below. Feel free to ask any questions you may have to the two founders and use this unique opportunity. I'm going to break the ice with a few questions to start with. Kimo, you touched upon how it all started, but might be worth explaining the garage story again to our investors. So in 2020, we were all sitting at home, we were bored doing things, and you guys came up with obviously founding a peer-to-peer lending platform. What annoyed you, or where did you see the opportunity?
Well, I think the whole thing started while I was still the CEO of one fintech lender, and we cooperated with one of the larger platforms. Actually, like they came to the office, onboarded us, and we were quite happy with it. But at that point, obviously, wasn't thinking of I'll be in peer-to-peer or a loan marketplace at all. Left that company, and like you said, sat at home bored. But I was investing on peer-to-peer platforms and marketplaces, and then COVID hit. Well, that's why we partly were bored, and I saw that there was a lot of problems with my investments, personal investments on those platforms. And I think that's where the idea was that, hey, we could do this better and different and bring some of that institutional way of looking at things to actually to the benefit of also retail, but not just for retail, but also to maybe attract more institutional capital into private debt. Not just the big guys who are, loans or loan marketplaces, loans generally, private debt it's called. It's a massive business. I think multi-billion deals are being made, but these are just very limited group of institutions that invest into the debt. And they like the yield. It's a great asset class, but it's not very well available to smaller institutions or to retail done in a proper way. And then that was the idea. Hey, let's this seems like it has legs. Let's start building. And yeah, a few years later, here we are.
Cool. Thank you. We have already first questions in from the audience. The first one is, how do you reach 30 million end of 2025? Was 19, now 23 behind schedule, question mark? I think that's asset under management, I guess. Huh?
Yes, for sure. This is asset under management. Target is not easy to achieve for sure. And we are not behind the schedule. We just actually had the budget update before this meeting. We see that first of the institutional investors joined the platform really successfully, and now they have significant portfolio. Our idea was that along with the retail investors, we will be focusing as well on onboarding more, and we have initial discussions in this direction as well. Plus, our pipeline of the new loan originators is really live. We see that bigger loan originators will be joining the platform, and everything should catch up to make it happen. Of course, we need to get more investors. We need this round to be closed to develop more features, but no, not behind the shadow.
Is it fair to say that you're shifting your investor balance a bit more towards institutional money? Not entirely, but like the balance a bit more towards big institutional money and less retail money. Is that a fair statement to make?
No, not imbalance from that perspective. We just would like to see more of them because we now have only one, and we see actually huge potential for them because feedback after real usage of the system is really positive. They like how we operate. We made a special functionality for them, so seamlessly working.
Got it. Second question we have is a regulation topic. You're not regulated now. Do you expect any issues when this will be required in the future?
Mhm. Two perspectives here. First of all, we are not regulated because Estonian legislation is not ready for that. We, from one perspective, would like to. We have checked, we just cannot because assignment of claims in Estonia is not a regulated activity yet. When it comes from one perspective, we are tracking the changes, just don't know ahead. Then it is happening some year, not as a surprise tomorrow. Plus, we have a plan what to do if it comes to force. To be honest, we even checked the countries close to us, Latvia, Lithuania, probably to get a license from there because we understand that for investors this is important, and if we get it, then it will look really well. But we more or less understand what to do when it happens, and we are keeping fingers on the pulse to understand what to expect from the future.
I'll supplement with a few words. Yes, we looked at it with our lawyers also way back, and we kind of benchmarked it to those P2P activities that are already regulated in Estonia. That means equity crowdfunding, kind of like SeedBlink, plus also real estate crowdfunding. And generally the regulation circles around investor protection, conflicts of interest, perhaps some capital requirements, and generally on the management's quality or let's say reputation. So like all of these things, I believe we have in place. So personally, also having looked at those, I don't see it as a risk, rather as an opportunity if it would come to Estonia.
Mhm. Next question is, in the future, do you expect to raise more equity, meaning more dilution?
I believe it's a bit early to give really precise answer on that. I guess if I have really good plan and why we need it, then for sure we'll be doing that. The main point here is, not to raise for fun. We always try to be careful here and to understand how we will use funds.
Maybe
So,
I'll supplement my view as well. As Lavrenti said, product is pretty much ready. We are, perhaps it's my thinking, his thinking as well, our thinking, reaching break even is important for that situation where you know that you can actually self-sustain without raising. On the other hand, if a startup is growing fast, and growing fast creates actually a more multiples for all the investors, all the equity holders, then you necessarily don't want to have that foot on the brake pedal, but it's good to have that option. On the other hand, I don't see us being able to spend so much more anymore on product development as everything works, that we would be needing immense amounts of capital.
I think the
I would
next
say
question.
yes. Sorry for interruption. I would say the speed and velocity, how fast we would like to grow, is the definitive thing here. The rest is already done or covered.
guess the next question is somewhat relatable, asking why the headcount is reduced when you would like to grow.
Would be okay. I guess this is the question regarding the past. We actually, how to call it, became a bit more effective and headcount indeed decreased. But we found a way, to be honest, to move exactly at the same speed without any impact from that direction. So I believe now it's the perfect balance.
Good. With respect to the business model itself, we haven't really touched upon it. You say quite clearly on one of the slides that there is zero losses for investors so far. That's obviously great. So there's a zero default rate. Wouldn't be surprised if that goes slightly above zero in the foreseeable future. Otherwise, you're just too perfect. But the business model itself, so where does income make money? How did you almost make $1 million with respect to your assets under management? And is it like a one-to-one correlation with assets under management, your top line?
Do you want me to take it, Lavrenti, or
Matter of taste, to be honest. You can cover.
I
Yeah.
can talk? So it all boils down to the annual fee, right? So we charge the loan originators, the fintechs, so kind of like the B2B side of the business. We charge them a fee for arranging the funding, a platform fee, and that ranges between 2 to 3%. And this once a loan originator is onboarded, on the outstanding investment amount from investors, we charge this fee. So, and this is calculated on a daily basis. So as the book is growing, you can't really say, okay, you guys are now at 23, thus 23 times 3%, you should have earned this much, because it's on a daily basis, it's a gradual curve up or down, but in this case up. So that's one thing. We do have some due diligence costs, which the loan originators also cover, because we do quite an extensive due diligence, and we quite frankly didn't want to carry that cost ourselves. So far, most loan originators have been happy to actually compensate for the legal work and also for the real costs of due diligence of the analyst work, which is also positive to the extent that it shows we're starting to get pricing power in the market. So that's the revenue side. At the moment, investing itself is free, but obviously, as an investor, you bring in your funds to invest. That generates the outstanding investments and therefore the revenue to us from the loan originator. So AUM is our North Star metric because it's our revenue generator, the main revenue generator.
Makes total sense, yeah. So we have one more audience questions. Those are priority, obviously. Do you expect to do an IPO in the future? The classic exit question.
Oh, yeah, classic question and pretty tough one. My personal looking at this one, is that IPO sounds great, but you have to be super careful with that because company should be strong enough, big enough, well known enough. Because we have seen a lot of cases when a company, rather small company, comes to IPO and then the share price just drops below the floor. You definitely do not want that. Currently, we don't have this like a super planned activity with some precise date on the wall. Let's see what life brings. We have ambition to grow really, really big. Then just let's see the future.
Yeah, if I supplement again my view, I share Lavrenti's view on the IPO. It's we as Lavrenti said, we've seen this sort of first north type of listings, which are not necessarily there's not enough liquidity and it can be. I'm not saying it's totally out of the potential ways of doing it, but if you look at an ultimate exit, then perhaps the intersection of fintech lenders and institutional investments or something along those lines in alternative assets. If you look at, for example, a lending club in US or companies similar. So we haven't honestly put focus too much on it, or I haven't at this point. I'm sure the idea will come, but now we're focused on growing with Lavrenti and reaching that break even and beyond.
which is the logical thing to do. And now I'm supplementing as well, because obviously SeedBlink does a lot of primaries and increasingly doing secondaries. And although it's always the holy grail to see an IPO in your portfolio because it's shiny, it looks awesome, there is chances that you will make some money depending on how long you hold it. However, the trend clearly was over the last years that companies stay private long for various reasons. One of the reasons in Europe being also driven by the not deep enough capital markets, quite frankly. I mean, there's very few examples. And even the big ones like the Clarinas of this planet, they all go to the States for obvious reasons. So I guess from my investment point of view, what I'd like to have is a company that's growing as fast as possible and that is basically capturing its market share and making a proper top line. The rest will come. It sounds a bit mythical, but the rest will come. And this is what we see with most successful companies. Whenever seed companies tell you about their exit strategy, it's fine. But quite frankly, take it with a pinch of salt. Okay, now my monologue ended here. Any further questions from the audience? Let me see. Not so far. I have a question, having myself background in banking as well. You talked a lot about your due diligence and risk scoring of your loan originators. Would you argue that this is somewhat your secret sauce? Because this is a key pillar of your whole business case, right?
I think we've been doing it from the start. I think, yes, we do things in a way that is different from other platforms. I'm not saying that the way other platforms is doing is bad. I don't have the visibility. I can't comment. What we believe we do is right, which is actually looking at the quality of the asset, which means the loan portfolio from different multiple angles, and then defining how much of investors can take risk. Is it, 70% of each loan, 80% of each loan, and so forth. So surely it is one of the key features, and we try to do it as well as we can.
And for me, now my time to supplement. For me, a really important benchmark was institutional investor, because those guys are not taking easy risk and what we're doing as a platform. I have seen personally what they have checked, what they have requested from us, and I must say that they left satisfied with the result.
That's good to hear. An institutional investor means it's like small institutional money. Is it bank, insurance, family office? Is that something you can disclose, or if it's delicate, then feel free not to answer.
I think it's already actually published as well. Our first was I2 from Austria, so it's in our blog as well. You can find it from there if you go to getincome.com blog.
Cool.
So yeah, you can take a look. It's essentially a fund investing into private debt. And they prefer to do it through some marketplaces, including ours. And we have a good relationship with them as well.
Got it. You said beforehand on one of your slides that you have around 4,000 or 5,000, I believe, approved investors. I think that's the term.
9,000 approved and around 4 active.
Okay, 9,000 approved and 4 active. What does it take for an investor to get approved, actually? Is that KYC AML topic?
Yes.
Yes. Approved is meaning that you passed the verification process, your ID is okay, you passed the KYC process, we can request the source of funds and you have to prove it. And active investor in this specific slide means that you also deposited funds and invested on the platform.
Got it.
So that's the difference. And obviously some people go active, then they go inactive, might come back, might not come back. But yes, it's mainly KYC that you have cleared the funnel that you actually are able to invest. And then when you decide to invest, do active. It sounds maybe a bit on the complicated for your average person, but the onboarding process is very, very easy. We do it through Verif, which is an Estonian, quite a big startup as well. I think a unicorn status at these days. So the online verification is very simple. You open your camera, get in. And then once you start with smaller sums investing, it depends on the sums a little bit and so forth. When do we actually trigger the questions of where are the funds for and so forth? But it's super simple. We do it to comply with the payment providers, banks, potential regulators, whoever asks. So we need to know where the money is coming from, also where it's going to, and vice versa. So But it's a simple process, and I urge everyone who wants to try it, see how it feels, maybe start investing also.
Starting
It's
from 10 euros, so you can
yes,
start
and it's
small.
starting from 10 euros, so we're not talking about much.
Okay, that's great. Question from Yaris, why is there a sharp drop in interest paid? I'm not sure what this refers to.
That's a good question. What drop is meant here, especially sharp one? Probably, I'm speculating here. This is from our statistics page, website, May 2025. Let me please open that as
It's
well.
on the website in May 2025.
I believe, no, this is from our web page.
It's interest paid to investors. Yeah, he's talking about, sorry, if you go to the statistics
Ah,
interest, I think that's just
Yeah, it's not a drop. You see, the interest rate there is cumulative for this specific month, meaning that when we switch to the next month, it will be zero, and it will be growing day by day till there is an end month. And for example, check the previous one; it's like high, and before that high. So May just May no, but May already ended. Sorry, probably there is some
there's
statistic.
probably some glitch in there. We need to take
Statistic
a
not
look.
updated. Yes,
Yes,
yes.
but there is no real reason for a drop. It's basically
Mhm.
it is as the last few months. So
Yeah, it is as I said, but actually, these guys eligible for backhand bonus. We have a glitch in the. So you can write to hello at get income and you will receive your bonus.
yeah,
Uh,
there's a glitch.
yes.
We'll need to fix it. Thank you. But there is no reason for the drop as such.
Mhm.
Okay. Any other questions from the audience? See, but I have some more. We talked about the secret sauce. Let's talk about the round itself quickly as we wrap it up. Can you sort of guide us through the history of investments into the company, where you stand now, and what you're going to do with the current round, and maybe also highlight and talk about the co-investors in the current round and the ones on your cap table,
Okay.
and why you think those could add some value to income.
I'll start from the very start, right? So initially, 2020, about 1 million euros was collected. And if you look at the growth chart, we started with a full speed on, hired the team, built the platform, kind of that first pre-seed money was used to get the business going. Uh, After that, we raised around 1.3 with Tolaram Fintech as the lead investor, and this was the 22 round where SeedBlink first time also was involved, or SeedBlink investors. That kept us going. And then essentially through the 23, 24, we've been supported mostly by the lead investor who is here included now as well, so the Hauptmann family. And then now 23, I would say and maybe even end of 22 was a difficult year for external fundraising and generally for startups overall. We saw a lot of the startups who raised at the same time with us. Last time we've seen a lot of them close because funding was really dried up. So existing shareholders kept supporting, and now we thought it's the right time to continue. So lead investor, the Hauptmann family, uh, SeedBlink, and then we're still discussing with some VCs also on their participation, and the deck is out there. So we'll see where we end up with the final composition. But that's pretty much the short story of income and its funding. Not very surprising. I think if today you would start looking at the inflation and everything, I don't think you could build the platform with the same amount of money that has gone in. Everything has gotten so more expensive. So regardless, I think we're pretty much online with a startup that starts building a marketplace in terms of cost and money burn. We're quite effective, or have been quite effective. So
And I guess part of the question was how we would like to spend funds. More details there, or?
No, I think you touched upon that already.
Yeah.
Oh, okay.
Is there any last and final questions from the audience? Because otherwise we would not unnecessarily drag things along here. Just suffice to say that Income is obviously fundraising on SeedBlink as we speak at the valuation of 5.5 pre, which we believe is pretty decent valuation, so good for investors. And the round is still open until the end of the month, so we try to close this one before everybody is off for the summer break. Having said that, I'd like to thank everybody here in the audience, all the investors who joined in. Everybody gets the recording of this session via email, also the ones that couldn't join but have registered. I would like to thank Lavrenti and Kimmo for your time. Always good also for me to learn new things speaking to you guys. And apart from that, have a great afternoon, everybody. Take care. Ciao, ciao.
Thank you.
Thank you. What a pleasure.